Welcome to the Finance Garage podcast, your go-to podcast for navigating the world of finance. I'm Jonathan, your financial guide, bringing the latest market trends, investment strategies, and financial news that matters to you. And by the way, I'm also going to share my other passion, which is cars.
At the SWU Group, we help everyday families achieve financial success. Our integrated services include financial planning, accounting, credit advisory, and estate planning. We're here to guide and support you every step of the way, from custom investment strategies to maximizing tax efficiency. We ensure your financial goals are met with peace of mind. Visit simonwu.com.au for more information.
Hey everybody, welcome back to another episode of the Finance Garage. As always, Jonathan Wu here, Senior Financial Advisor and Principal at the SWU Group. Today, really fortunate, I have, I think is a superstar in the Australian finance world. I have Dr. Shane Oliver from AMP, who is AMP's Chief Economist. The way I sort of asked Shane to come on the podcast with me was a couple of weeks ago. Shane kindly spoke to one of my discussion groups over at CPA, and I asked when Albo inevitably calls an election, which really would be in somewhere between 60 days' time, depending on whether or not we'd see a budget come out of it. I asked if Shane would spare me some time to come on the podcast to talk about it. So here we are today. Just for context, we are recording this on the 9th of April, and I don't usually say this, but I guess given the fact the macro picture changes so significantly day to day with Trump tariffs and Liberation Day and all these sort of things, we'll contextualize it that everything that we say today is as at the 9th of April. So obviously, welcome, Shane.
Thanks, Jonathan. Thanks for having me.
So let's start domestically and let's talk what happened a couple of weeks ago with the budget, which is obviously an odd budget, given the fact that usually you only see 3 budgets in a government term, and this one was the 4th one to come out. What's your overall take from the perspective of economic management or political messaging?
Look, I found the budget pretty bland, to be honest with you. I was a bit disappointed that we had the budget because we all knew that an election would probably be called just around the corner. And if there were to be a change of government, it would mean probably another budget later in the year. And I also thought that it just makes it too political to have a budget that close to an election. Mind you, we had the same thing in 2022, so in that sense, it's not that much different. But it was very political. It was all about gathering together the various promises and spending commitments that the government's been making since January. So there wasn't a lot of surprises in there. The big surprise was the tax cuts, itsy-bitsy little ones, $5 a week initially, and then $10 or whatever it is. Not much. Sandwich and milkshake came to mind, although these days it may not even buy that.
No.
But in the great scheme of things, it had the same pattern as previous budgets. In other words, lots of money was being spent, but the budget numbers didn't look that much different to what they previously looked because there's an ongoing windfall of money flowing to Canberra from higher than expected commodity prices and a stronger than expected jobs market. And that's why the overall numbers weren't that different. But we did see a situation where something like 96% of that windfall was being spent again. So you get the extra money in, that then enables the government to go on their spending spree, so to speak. There was nothing in there that inspired me regarding structural reforms to the economy. Overall, pretty bland. Everyone seemed to be a winner. There were some losers in there, but not many in the great scheme of things. And I think it was fairly quickly forgotten about in the rush to go on to the election.
Do you think that also in that same context, Dutton's response was also less than enthusiastic? It was just basically saying tax cuts are so far out, it doesn't matter, I'm going to do the fuel excise cut, it's going to be immediate, it's going to help everyone, so on and so forth.
Well, that's the nature of politics in Australia. You just put these Band-Aid solutions on rather than come up with fundamental inspiring reforms. The fuel excise was tried by the previous coalition government in 2022, and it's somewhat popular. Lots of people drive cars, obviously. does save 25 cents a
per
litre.
Yeah.
I get $10 a week saving. I think Dutton got 14 or something, and 2 cars $28. So anyway, so there is a saving there, and it is more immediate. So in that sense, it helps people. But it's the same as the other ones: the energy rebate, the electricity rebate,
the $300,
the $300 or the $75 a quarter rebate, which was extended out to December, and the increased drug subsidy under the pharmaceutical benefits scheme, those sorts of things. So it's a continuation of that sort of stuff, which doesn't really, I think, in the great scheme of things, solve the underlying problems. It just puts Band-Aids on problems. And so in that sense, I thought was not particularly thoughtful or useful from an economic point of view. It's also, you could argue, unfair. And if a lot of people don't have a car, so they miss out. If they've got an electric vehicle, they miss out again. So in that sense, it doesn't get everybody. But by the same token, I'd also criticise the tax cuts. They weren't fundamental in a sense. I would have liked to see permanent indexing of our tax scales
to stop bracket creep.
Bracket creep. So the one that people often think about these days is the 135,000 tax bracket, where you jump up from, I've forgotten the precise numbers now.
About 30 to about 40.
About something like that, could be 39 or something.
Yep.
That one was the one that was going to be removed under the previous stage 3 tax cuts and then was reinserted. So I think the rough numbers are that within a year, the average full-time wage earner in Australia will be at 135,000. And so they'll be right on the edge of jumping up that next bracket, which was never meant to be for them. Mainly because of inflation and wage inflation generally pushing up people's wages, but then pushes them over the tax bracket and the new tax bracket. It would have made more sense to increase those tax brackets in line with inflation or wages growth. But of course, governments don't want to do that because it removes the ability to claim they're getting the budget under control, and also removes the ability to give surprise tax cuts.
Yes. I mean, talking about sort of Band-Aid solutions to things, do you think that is just a fundamental consequence of our system of 3-year governments? My dad, used to tell me when I was young, this is how the election cycle works, son. First year we celebrate, second year we sort of map out a plan to get re-elected then in the third year and run another election campaign, meaning that structural issues that are underlying the economy it's just fundamentally hard to tackle, especially if we consider, I think I saw a sort of a statistic that comes out that if Labor doesn't get re-elected this term or this election, it will be the first government, I think, in history that didn't have a second term.
There was one, I think, in 1930.
Oh, okay, yeah. Or it was so long ago, so long ago. Yeah. So is that just a factor of our system that it's just hard to tackle structural issues in 3 or 6 years?
It is, yeah. You really need at least 4 years to tackle structural problems. Because as your father was saying there, you get over the first year, and then by the time you get to the second year, you're starting to think about the next election sort of thing. And so there's not enough time. And there's also this J-curve phenomenon that if you do a structural reform, it will take a while to bed it down. And some structural reforms mean things get better before they get worse. All those people who are adjusted and put out because of the reform, and then you get to a point where the benefit of the reform comes through, but the political cycle may mean you may not get the benefit of that within the 3 years. So it would make more sense to go to 4 years. I think the other factor is that politicians in Australia are driven by focus groups and what's politically popular, as is a lot of stuff these days. What's trending on X or Instagram or TikTok or something, those things count for a lot.
Yes.
And it's not necessarily the right way to run policy, I think. I mean, I've had this debate with political experts and strategists and what have you, and they think the focus groups could put you on the right path, and they want more than Band-Aid solutions, whereas I tend to worry that the focus groups if you always get in a focus group to tell you what to do, then they will probably tell you things that are politically popular.
Yes.
And might put money in their pockets immediately, as opposed to structural reforms that might benefit the economy in the long term. It's like the Q&A audience. You get applauses for saying things that are more immediate and give you handouts and what have you, as opposed if anyone shows up there, an economist shows up there and talks about structural reforms, like Paul Keating might have a generation or two ago, you wouldn't
People
get
tune out.
they'd tune out. You wouldn't get an applause.
Yes.
So most politicians don't do that. There are some good politicians. I saw a good debate there between a couple of nights ago on Q&A. So sometimes that they are reasonably good, but a lot of time they just say a lot of stuff that
Short-termism.
is very short term and doesn't really get to the nub of the problem. I mean, that's the problem with the democracy, but it's also been made worse by increasing short-termism, just as we have become more short-term and more focused on short-term gratification in terms of what we watch. I mean, we used to watch TV episodes of a series spread over weeks. You know, 1 week and you watch it and then you wait for the... Nowadays, you sort of wait for White Lotus to come out and then it's out round for a little while and then you start binging it until you get to the end, sort of thing, because you can't wait to get to the end. And that's often the way we watch things these days, you know, that short-term fix.
It is a bit sad, but it is true. I mean, I'm guilty of it myself. I think I was, what was something I recently watched? Oh, Yellowstone.
Yeah.
And because Kevin Costner decided to, bugger off or whatever. And so it was left a void and they had to make 5 more last episodes, which wouldn't come out for another 12 months. When it finally did come out, they drip feed it like once every 2 weeks. And I said, no, I'm not watching it until all 5 come out so I can watch it all on a long plane ride. So I'm guilty of it too. Let's move on from the budget. It was clearly very boring overall. Let's talk about the structural issue. You have so many decades of experience of viewing local and global markets and economies. As it stands today, what do you see as the major structural challenges of the Australian economy?
Well, the major one is highlighted by the so-called cost of living crisis, which is often exaggerated the way it's presented. It sort of compares household disposable income per person in real terms to where it was in, say, 2021 or something. And a lot of households got a bit of a boost as a result of government handouts. And when you do that comparison, you get a drop of about, what was it, 2022? You get a drop of about 10% on that measure. The real issue, I think, is not so much that period, which was distorted by what happened in the pandemic. The real issue is that over the last 10 years, real household disposable income per person in Australia, so that's incomes adjusted for inflation and also adjusted for taxes and payments you have to make, like interest payments and so on, and then looked at per person. It's basically stagnated for the last decade. And I guess a lot of people think of that, oh, well, it's big business ripping us off and putting the prices up and big business keeping the wages down. Well, I think that's a nonsense. I don't think it was the previous government artificially keeping wages down either. I think the basic cause of that problem is a lack of productivity growth in Australia. For the last decade, our productivity growth has stagnated, and in recent times it's gone backwards, much like household disposable income. And productivity is the key. It's how much extra we can produce per hour worked, and it is the key to driving our living standards higher. If we can't increase the amount of stuff we produce per hour worked, it's hard to get paid more without generating inflation, in which case it's not a real wage rise. And over time, our living standards will go backwards. I mean, we can fight amongst ourselves about who gets what, buddy, in the national size of the national pie and how we slice it. But in the great scheme of things, as a nation, we won't get wealthier. And our incomes won't rise. We might get wealthier because of good luck. China pays us more for our iron ore, or we pay each other more for house prices and push them up. But in fundamental terms, in terms of what our wages will buy, we won't have that growth in the purchasing power of our wages that we got used to. So if you go back 40 years ago, we went into a period where we freed up the economy, we removed tariff barriers. I know the trend now is going the other way, but we removed tariff barriers. We opened the economy up. We became more efficient in the way we produce things. We deregulated the labour market, deregulated product markets. Government entities were sold off to private operators. And that led, and we got inflation under control in the process, that led to a situation where productivity growth surged. And we had tax reform through that period as well. The introduction of the GST, removal of a whole bunch of niggly, annoying taxes. But anyway, those reforms in the Hawke-Keating years and then Howard Costello led to a pickup in productivity growth and real incomes as we went through the 1990s and the 2000s. And of course, in recent times, we've gone backwards. We've re-regulated the labour market. Some of our industries have become oligopolies with not enough competition. We've increased the size of governments. Government spending as a share of the economy has gone to a record high. With that has come more regulation in terms of how you can do things and whether you can do things and how you can do them.
And how fast or slow.
And that's showing up in the housing market. I mean, it now takes twice as long to build a house than it did in 2015, to put up a bunch of units than it did in 2015. We know we need the units because we've still had strong population growth. But because we've been slower in building them and approving them, it's meant that we end up with this chronic shortage of housing, which has led to lots of angst about the cost of living. The two are interrelated. We've slowed things down for home builders, which has meant higher housing costs, rents and house prices, which has then led to angst about the cost of living.
So its own vicious cycle.
It's its own vicious cycle.
Yeah.
So the solution is, well, obviously, you've got to keep immigration at reasonable levels. And arguably we had too much in 22, 23. It's very complicated, though, because previous couple of years we had none.
Correct. So it's playing catch up.
It's playing catch up. So that confuses it a little bit. But the key issue in all of this is make it easier for our home builders to supply those homes, whether it's in our cities or in regional areas. Even in regional areas in Australia, housing is quite expensive. And there's lots of restrictions around what developers can do and how long it will take and all this sort of stuff. So that's just an example of where it's gone off the rails in Australia. In 10 years, time to get approval is blown out. Time to complete a house once you've got the approval is almost doubled. So that's a major, major problem.
So are we sort of back to the future in the sense of, take aside any technological advances, we're sort of back to where we were 40 years ago with the level of regulation that is slowing productivity? Because even the government, I think the federal government conceded that we only had nominal GDP growth because we had population growth via migration that just added bodies to the employment force, and that productivity, I think last time I checked, was last 3 years we're down about 8% in totality.
Yeah, productivity is down. The output per hour worked is down. It's maybe not, I can't remember the precise number, but it's down a significant amount. And that's correlated with the fall in real household disposable income per person. The two have gone hand in hand over time. If we didn't have the population growth, then we probably would have been in recession the last few years. We had what you call a per capita recession. So individuals had cut back, but there was more individuals here, so that kept the economy going. And the other thing that happened was that we had public spending growing at 4% per annum. So the private sector cut back, but public spending was still very strong, and we've taken public spending as a share of the economy. I think it was used to be around 20, if you look at federal government public spending, it was less than 25%. Now we seem to be settling at levels around 27%, 26, 27. So we've added about 2 percentage points to public spending as a share of, that's federal public spending. And likewise, if you look at private sector public spending, you've got this similar rise. I think it's a record level of 28% of the economy. Now, obviously, you might say, well, federal is 27 and total is 28. There's a transference between the federal government raises tax revenue in Australia called the GST, and they give it to the states.
Correct.
So that's included in the federal figures.
Yeah.
In total, though, they've gone to a record level. That in turn, that extra public spending is taking money away from the private sector, and it's not available in what I would think is the most productive part of the economy. You might think I'm sounding a bit like Elon Musk, and I'm not a great fan. But the problem with the way they're doing it is that it's sort of unsustainable.
As in the way that Elon is trying to cut stuff
you're sort of going with a chainsaw and you say bad things and spy on people, and then sack them one day and, we need them, we better bring them back, sort of thing. That to me is just ridiculous.
It's
a ridiculous way of doing it, and it'll just create a backlash. You've got to do these things in a sustainable fashion, and we really need to go through and look at regulations. We respond to each crisis with piles of regulation, like Storm Financial. GFC, in the aftermath of GFC. So you pile on all this regulation, and then we work out, it's very hard for the ordinary person to afford financial advice. They say, oh, well, what have we done here? Or blame the financial planners or something like that. But it just seems as if it's made it a lot harder for ordinary Australians to get a decent service on that front.
Yes.
And so it's the case with many things. You sort of go from one situation to another where probably you're not regulated enough, mistakes are made, and then you over-regulate, and then you end up with a problem.
And the red tape kills everybody.
The red tape kills everybody. You can sort of see that's happened in the US, but I just think the way they're going about unwinding it is too aggressive, particularly the government spending, because it then creates a backlash and we end up back where we were before.
I think you're right. I mean, I think that the way that Elon is taking the cuts to government spending is really much taking a private sector approach, right? Basically, it's sort of the fail fast, fail often model, whereby you cut out an entire department, and then, as you said, oh, we sort of need those people. Let's hire them back. So I failed, but then I quickly restored it. But government departments, people rely on government departments for basic essential services. It's a little bit different than saying I bought a Tesla and I need to get it serviced, and I can find many other places to service it. But essential services, hospitals, police, education, I think one of the biggest chain store things he wanted to move on was removing the Department of Education in its entirety to then put it back to the states, right? Which in itself, the states aren't equipped to do it because they've relied on the federal. So again, that's just a transference rather than actually achieving anything meaningful.
Anything fundamental.
If we consider this structural problem in Australia around housing, cost of living, a lot of young people I talk to, probably in the last 12 months has been more prevalent. I would say, you're willing to spend $700 to watch Taylor Swift, which I think is insane. Maybe I'm getting a bit old.
I saw her.
Oh, sorry.
But I got a $65 ticket.
Oh, well, that's slightly different.
Because it was that last few weeks before they released tickets to the side of the stage.
Oh, okay.
And so a colleague, I got on there as well, but a colleague managed to get me some $65.
Well, but that's value.
Well, it's good value. I reckon I got the same value as someone who was
paid $700
and probably way up there.
Correct.
Sort of thing.
Correct. So these young people I spoke to, it was a colleague of mine in Brisbane, and I said, what's your plans for the next year? I'm going away to Europe for a holiday, going to Hawaii, and then I went to see Taylor Swift. And I go, okay, but you say the cost of living is really expensive. He goes, rents are ridiculous. And I said, so if I put two and two together, would it be fair to say that given the fact that you want sort of that instant gratification means that you basically have no objective to buy a house or buy a property in the future? And she said yes.
Yeah.
But that's sort of, I think, the psyche part of it, whereas it's like it's dismay and just their own reality check that the only way I'd ever buy a property is through my parents. Therefore, if my parents don't have the capacity to do that, then don't bother. I accept that I'm going to be a life renter, which is not what my parents or my grandparents ever thought of. In your opinion, with either side of politics, is there any will to try to address this structurally rather than the band-aids that we just talked about?
Well, it's not particularly apparent. You could argue the coalition, it's a bit mixed on both sides. I mean, you could argue the coalition is a bit more focused on containing the level of government spending, although, mind you, it did blow out heavily under the previous coalition government. And the budget updates in 2021 and 2022 just seemed to lock in. And there was the spike associated with the pandemic came back down, but then they seemed to lock in ever higher levels. But they seem to be a bit more focused on deregulation and smaller government than the ALP is. So you could argue in that sense there's a bit of a commitment to some structural reform in a narrow area. I don't see any commitment really to serious tax reform. And on housing, I think to their credit, Labor has probably focused a bit more on the underlying supply problem than Coalition ever did, although Coalition is starting to get there as well, which is a good sign.
Which policy specifically?
Well, the housing accord with the states, I thought was a reasonably sensible thing to do, to aim for 1.2 million homes over 5 years. That's 240,000 a year. We probably need to build that. I mean, underlying demand, spiked in the last couple of years. It was around about 250,000 or something. It's now back to around about 190,000, 200,000. But you've got to build above that.
Correct.
To eat into the undersupply from the previous years to catch up. So 240,000 I thought was a sensible thing. And then to incentivise the states via various financial incentives to do that, i.e. to make the land available, speed up development processes and all those sorts of things, I think was a sensible attempt. Are they going to get there? Remains to be seen. So far, they're well behind. We're almost through the first financial year. In the first financial year, we'll probably only see about 100 and maybe 180, maybe 190,000 dwellings.
Well short.
That's well short. But we are starting to see a pickup in unit approvals, which could be a positive sign. And yeah, but it's going to be a struggle to get to the 240,000 a year. But at least there's some action on that front, recognition that it's mainly a supply problem in the great scheme of things. So that's a good thing. But I don't see any fundamental commitment on both sides of politics towards fundamental, broad-based economic reform. Maybe you could argue that this is not the sort of thing you'd see at the time of an election anyway, because these things don't necessarily win votes. You know, Hawke and Keating did go to the Australian population in 1983 with a reform agenda. They just sort of stumbled on it when they realised how bad things were and we got to do something. They were, to their credit, in the 87 election, they went to the electorate with very low real spending growth, and they really did constrain things through that period, and they got re-elected, to their credit. I guess you could argue John Howard went to the 1998 election with a commitment to a GST.
Yep.
He nearly lost it, but he got back in. The only times when you've had real, I mean, you could argue fight back in 1993 was a fundamental reform objective put to the Australian population, which was rejected at the time. That was John Hewson's fight back.
Oh, yes.
And then there was
That's the birthday cake one.
Yeah, there was the GST with the birthday cake. Then there was the 2019 election where Labor went with a fairly big reform agenda, mainly in relation to taxes, though. But I think beyond taxes, there wasn't much really in the way of reform.
Was it the franking credit or the negative gearing?
Well, it was all of them. Negative gearing was
right.
going to be restricted to new homes. Capital gains tax discount was going to be halved, I think.
Yes.
The family trusts were going to be restricted or ended. Franking credits were going to be restricted when you don't have the income.
That's right. You can't offset against if you don't have income, as in you can't get a refund because of credits.
And there was one other. Yeah. But the trouble is most Australians are affected by one or other of those things. And you could also argue that restricting negative gearing the capital gains tax when you already have quite an onerous income tax scales in Australia is a bit unfair. Like, it's the high end that pays the bulk of the tax. I think the top 10% pay more than 50% of the revenue going to Canberra or something like that. And then you say, oh, we're going to restrict negative gearing capital gains tax. That means they're going to pay even more of the revenue going to Canberra, which you could argue is a bit unfair. So you've already got a bunch of people opposed to it. Then you've got ordinary mums and dads, you know, who like negative gearing. So you can understand why that was rejected. But I don't think there was a fundamental reform. It wasn't as broad-based as what Hawke and Keating did or what Fightback proposed in 1993.
Where does that leave us then? If neither party has the capacity, will, or political leaning to be able to solve the problem, does the problem just simply exacerbate, and that dream of owning a home or saving up any money due to an increasing cost of living, just it gets further and further away?
Well, it gets harder and harder. Yeah, that's the basic problem.
But that then leads me to...
But that's not a good outcome.
Well, is it?
Or is it? Well,
don't we just make the Gini coefficient worse, right? Because you have the difference between the rich and the poor become structurally so bad, we get to a US style scenario or even a China style scenario, because both of those countries have got terrible Gini coefficients. The only thing that I believe structurally in my mind as an advisor is the only thing that stops us from going further down that path is a marginal tax rate system, income tax system, right?
Yeah.
But if it's only going to get worse, then the only thing it leads to, sadly, if we look at really long-term history, is revolt, isn't it? Because the mass population becomes so unhappy, it's effectively a hollowing out of the middle class.
Yeah. Well, you could go down the US system, where there has been a revolt to some degree. People have seen their saviour in the form of Donald Trump. Yes. Which is perverse because he's a billionaire, and then a lot of his supporters were billionaires. Although they're fighting amongst each other now, but it's a bit ironic in that sense. But still, that is the basic problem, that if you don't do anything about these issues, then you end up with potential revolt. It's a bit like John Maynard Keynes recognising that Marx might have been right, that you end up with these worse economic crises through time. Maybe the 1930s was an example of that. We'd either let things continue to go off the rails or government should intervene to make sure that doesn't happen. And that's what basically should happen here. I don't think it's necessarily government has to intervene, but it probably does. I think the basic housing and affordability problem is largely government related. You can go to states in America where they don't have a housing affordability problem because there's open slather just about in terms of building things, like Texas.
Find a block of land, do it yourself.
Yeah, off you go, sort of thing. So I've seen these comparisons with Austin, Texas, and Perth, WA. Very rigid controls in Perth, Austin not much, and the price to income ratio in Austin, Texas goes sideways. The price to income ratio in Perth goes sky high over time. So you could argue, well, we could go down that path. Maybe that's a bit too extreme, but I think government has to play a role here in making sure that immigration levels are calibrated to the ability to build homes, that we don't overburden home builders with lots of regulations, that we should endeavour to take pressure off our big cities and have more people living in other cities, which means making it easy to work from home, making sure the infrastructure is there, health, social welfare, roads and so on, make sure that's all there, and refocus away from these big cities. I mean, that to me is the fundamental solution to it as things currently stand, because there is also a problem that if you jam too many apartments in, then the Australian way of life will get somewhat compromised. But
then you bring forward the argument of, or bring forward the case study of Singapore, right? 80% of the population is in public housing. Yeah, apartments and public housing. And it works. People are happy there.
Yeah.
Yes, it's a smaller scale. You argue that there's only 3.5 million or 4 million people in Singapore, therefore it's a much easier population to control.
Yeah.
But having, yes, the fact that I think a majority of the population of Australia over time, if you want to live in the city, is you have to resort to living in apartments.
Yeah. Well, maybe that's the case.
And that's,
you just have to accept it. But still, I think you should give people the choice. And it would make sense to be, in an age when you can do that, a lot of jobs can be done remotely. I mean, a lot of jobs you still need to come into the office and see people and whatever. Fair enough, but a lot can be done more remotely, and that should give us flexibility to decentralise.
Ready to take the first step in investing, or just looking to continue growing your wealth without being inundated with financial information? With SWU Online Invest, we offer a range of expertly managed portfolios designed to match your investment needs. Whether you're a seasoned investor or just getting started, know that we will work tirelessly to ensure your investments are strategically positioned to maximize your goals. Visit swuonlineinvest.com.au today.
I sort of take an observation from literally today, nothing to do with Trump as such, but we've seen nurses strike, we've seen train drivers strike, a lot of things here in this
ferries.
Ferries, yeah. Today, out of all industries, doctors, which are, the highest, probably one of the highest parts of the pay scale for any profession, they're on strike for 3 days.
Yeah.
Okay. Public hospital system, granted. If they're unhappy, that's a pretty big problem because they are generally way above the average wage earner, right?
I think these ones are the doctors. Yeah, they're often earlier in their careers, and they're the ones taken advantage of in the public system, and having to work 12-hour shifts and all that sort of stuff. So,
but I just sort of take that as there's these professions that are reasonably well, at least future-proofed in terms of their career, and even they are striking. Right, that shows you, I guess, the level of discontent broadly in the economy. Let's now turn to the US to sort of close things off. I mean, Donald Trump's clearly, we were saying just before we hit the record button, I find it amazing that the President of the United States can just go, I'm going to whack every country with tariffs and what's the next step? I'm going to go to my own golf course in Mar-a-Lago, hit 3 rounds and then say, I won. There is a thesis, and I did ask this of Gyan Pandit, who's the deputy head of equities at Ausbil last week, the same sort of question. There is a theory in the market, and being an economist, you'll have probably better insights than most, that, the US economy in the last sort of 12 months, if we think about it using an analogy, instead of doing 60 kilometers an hour at its normal rate, it's been sort of going 100 kilometers an hour. So it's like over 2% growth. And for an economy that size, that developed to go over 2% a year is a lot, right? And so there's some overhangs of the Biden administration's deficits and spending. And effectively, Donald Trump's coming in, hitting with tariffs and doing all these policy adjustments that is slowing down the economy, but bringing it from sort of 100 kilometers an hour to 60, which is the norm. The theory is that the tariffs will then push the economy to become even slower, which will trigger the US Fed to then cut rates. That will allow Donald Trump to go to Congress and say, because he needs to prove, what is it called, disciplined spending or something, like in terms of being responsible, fiscally responsible. That's right. And so, because at the moment, the US effectively focuses on rolling their debt on 30 and 90-day terms.
Yeah.
And Donald Trump's like, why aren't we rolling it
some
for
of
10
it
years?
is. A lot of it is 10 years.
Oh, a lot of it's saying, well, I think he wants to move more of it to 10 years.
Yeah,
Force
they even have a 30-year.
Yeah, well, if it can force the Fed's, arm effectively to cut rates and then refi all the debt and push it out at a lower rate and save the interest, proving he's fiscally responsible, then he'll unleash and reverse a whole lot of stuff.
This is a hedge fund theory, and sometimes called the Mar-a-Lago Accord.
What's your thought on that as a
running tariffs to push the US economy into recession, it's a heavy price to pay. There's also confusion about it because a lot of there's that theory. The other theory is America does have serious gripes about other countries' trade practices and wants to make them more reasonable. A related one to that theory is, of course, Trump wants to raise more revenue from tariffs. He does actually believe that McKinley was a fantastic president. He was the one relying on tariffs in the late 1800s, I think it was. Most MAGA supporters do want to bring production back to the US. They dream of the 1950s when a big chunk of the US workforce was in manufacturing. And trying to work out which of all those theories is the dominant one is a bit hard because there's so many twists and turns in the tariff story. I think the theory that he's trying to engineer a recession is probably giving him too much credit. I mean, it seems a bit too smart, and he is like a recession would probably mean a bear market. Bear market in shares. We're already, as we speak now, we're down about 19%.
Yep.
Up to the 8th of April in the US. The tariffs, we've just started. The new big tariffs. So that theory, I mean, it's interesting, but I sort of think it's probably giving them too much credit that that's what they want to do. But I've sort of come to the view that there is some level of tariffs that they want to actually see as a permanent fixture. And they really do want to see production go back to the US. When you listen to Steve Bannon, I mean, that's what he raves on about, and Navarro and others, that's what they want. So it's partly about bargaining, but I think a big part of it is getting more production back in the US. Then, of course, you've got all sorts of debates around how rational all that is. As an economist, I think it's crazy. It's a bit like in the 1950s saying, well, we've only got 5% of the workforce now doing agriculture. We want to go back to the 1900s when we had everyone doing agriculture and we'd all living a rural life in farms. So this hankering for the past is a common phenomenon in the US. In the 1970s, they produced films and TV series about it. American Graffiti was the first, and then it came Happy Days, Laverne and Shirley, all dreaming of the industrial paradise of the 1950s. But that's all past. If you bring the production back to the US, you face numerous problems. The iPhone, we did a rough calculation on the iPhone 16 Pro. It, I think, retails in the US for about $1,100. The wholesale price is about $550. Apple costs and clouds and all sorts of other things around that is the remainder, so another $550. Let's assume the $550 stays as is, but you put the tariffs on, then your wholesale price goes to about, this is before the 104 on China. Yes. The wholesale price goes to about $850. So that's a huge jump in the wholesale price. And if Apple wants to keep its margin, then the retail price jumps to about 1,400. Big price increase.
That's before the 104.
That's before the 104, just assuming the 54
Correct.
on China.
Correct.
And then if you say, well, that's just the stuff being produced overseas and paying the tariffs, then you say, well, let's bring all the production back to the US. If you look at the minimum wage or the average wages in China and the US compared to China or India or Mexico or wherever, they're about 5 times higher. So that wholesale price will get another leap up once you apply US wages to it. So you're potentially, on one of our calculations, about $2,500 for an iPhone in the US.
And that's US dollars.
That's US dollars.
Yes, yeah.
So 1,100, 2,500, something. That's a massive increase. In fact, the producers in America might say, oh, we don't want to go that far. We'll just pay the tariffs. We'll just pay the higher tariffs.
So why do it then? If you've done maths to
well, you'd think that they could do the same thing.
Exactly.
You think that
they've got a whole Treasury Department to do that.
Yeah, that's what they're employed to do. But they've obviously sacked the people who can tell them this and think, oh, well, we can still make it in America. But I don't think that's the case.
But Trump's not that dumb.
Maybe not. He thinks the foreigner pays the tariff.
You genuinely believe that he thinks that? Like,
well, that's
your opinion? But because that's what
I think he really believes that. I think he really believes that. And
wow,
the foreigner only pays the tariff if the American importer says to them, can you share some of that tariff cost with us? Are they going to say that? Well, in some cases they might, but the bulk of it will be passed on to consumers.
In the US.
As a cost increase.
Yes.
The foreigner will only pay for it really then if the tariff goes up so much that
demand gets zapped.
Demand gets zapped and all goes back to the US. But that's a long way to go.
That's right.
Because a 25, even 100% tariff on China would probably still leave many Chinese goods cheaper than the domestically produced alternative.
Yes, because the thing is, I mean, and even if you, as a business, if you said, okay, I'm going to go and reshore my manufacturing, that's also going to take quite a period of time. It's not like a 3-month thing. Go, oh, okay,
it could take decades.
That's right.
NAFTA was North American Free Trade Agreement. Yes. That was in the Clinton years, so 30 odd years ago. And production for autos then gets spread all around Canada, Mexico, and the US. Bits go from here, there, and all over. That was 30 years in the making for that to happen. Now we're trying to reverse that in just a few months. Well, it won't happen. So, and then the producer will say, well, why bring the production back to America if labour costs in Mexico or China, wherever, are 1/5 of what they are in America? So I may not do it anyway. And then you might think, well, Congress is going to challenge the tariffs or legal challenges, so that's another reason not to do anything. And Donald Trump may not be president next time around, and the Democrats may come back and reverse it all or some of it. So a lot of producers would be thinking, oh, this is just gross uncertainty. What do we do? And you don't get that return to the golden age of the 1950s at all in America. Not much production comes back. Donald Trump's going to talk it up. I mean, my take on all of this is that as you go through into a bear market, potentially on US shares, that he will start to take fright at some point, start to negotiate. He's maybe already starting to pivot on that front. And then he'll back down, he'll declare victory. Oh, look at all these achievements. We've come on, we're fantastic, aren't we? And then the tariffs will end up settling at some lower level. But some countries, like China, they'll play hardball. It's going to get a lot tougher. And there's also this risk that other countries will say, well, you just made up your reciprocal tariff calculation. You pointed us to the US trade representative with that crazy formula. And then the two key numbers in the formula are set at 4 and 0.25, which we all know equals 1. Yep. And so all your formula is your trade deficit with us divided by your imports from us. That's all it is. And there's no logic behind that at all. No. So therefore, what are we going to negotiate on? And then they'll say, well, you've got a GST or a value-added tax. Mm-hmm. We only have sales tax of averaging 8%. You have one of 25%, Europe, say. And then the Europeans say, what are you talking about? We tax a good whether it's imported from the US, imported from anywhere else, or made here at the same rate. So how is that discriminatory? And then they'll they'll
make something else up.
So, there's all sorts of debates about whether there's actually potential to negotiate with the US on some of this stuff, which makes it all very complicated, which is what share markets are trying to grapple with right now. I think that there's a lot of uncertainty around all of this. I think at some point Trump has to back down. He has to pivot towards his tax cuts and helping American households weather this storm. I guess the concern is whether he does it quickly enough. Hopefully he backs down quickly enough, but there is a danger here that as markets keep going down that he doesn't, and then you end up with a rougher ride. Now, I think it's the good news here in Australia is that we do have some buffers. We can cut interest rates. The Aussie dollar will go down. That provides a bit of a shock absorber. Same thing happened in the GFC and the pandemic. Aussie dollar goes down, so it helps us a little bit. We're not putting tariffs on all of our imports. No. I'm not seeing tariffs on all of our exports, only 5% of them going to the US. So it's not necessarily the end of the world for Australia, although it may feel that way.
Politically, yes.
But obviously it's going to mean a rougher ride for a little while before we get through this. But I think ultimately he has to back down, pivots towards more positive things. He'll get sensitive about share markets falling, and then he'll try and engineer a recovery into year end. So his party, the Republicans, don't do too badly in the midterms next year.
It's interesting because the only country that has a track record in dealing with a US aggressive trade policy is China in most recent years. They've dealt with it for 8 years. Europe hasn't really had to deal with an aggressive US trade policy, neither has Mexico, Canada, or Australia. I mean, do you think that the countries ex-China will ultimately go, well, this is all too hard. He seems really aggressive. And if Trump really doesn't back down, the only natural response is ultimately these countries will blink and will go, we'll deal with whatever. Well, in China's case, it was, what are they claiming? The fentanyl problem, or, the drug trade for Canada and Mexico and whatever other stuff it's being, pouted by Trump. Those countries don't have a choice, right? Economically, they have to blink and concede. Is that their only choice?
Well, some of them do. I think Mexico and Canada probably have to concede. Some of them are only getting little tariffs imposed on them, like Japan, I think, will come up with things. Korea will as well. But I can't imagine a bunch of them saying, well, this is all too much. You're imagining things. We always thought you were ripping us off, not us ripping you off. And worst case scenario, a lot of countries can say, well, we're not going to buy your bonds anymore. You're already seeing this backlash, which is not organised by government. It's just a natural one. Backlash against Tesla. The flow of tourists going to America is taking a hit. I go to my local Woolworths, which is the supermarket in my suburb, and look at the bright oranges from Southern California and think, should I buy them? I might buy the Australian ones, Valencia time of the year thing, sort of thing. And so I end up buying the Australian ones. It's just sort of thing, well, do I really want to help them out? Well, I've got nothing against farmers in California at all, but
it's the price.
No, it's not the price. It's just, you kind of think, well, should I be buying your stuff if you're treating us like this? It just seemed unfair. And so you'll have a lot of Australians, I think, behaving like that. Like that. It's not necessarily the government doing it. They just sort of think, oh, this is a bit rough what you're doing here. You can see that on a grand scale in Canada in particular. Trump's had a perverse effect that incumbent governments are getting a boost from him because...
because of the uncertainty.
Because of the uncertainty, and they're standing up. It looks like the Liberals were going to lose the next election. Mark Carney comes along, and now there's a good chance they might win the next election. So Trump's having this perverse effect. Or the Europeans are rearming, but whose arms are they buying? Not the F-35s from America. They're buying their own stuff.
Correct.
Which, again, is not the sort of thing that I think Trump had in mind.
Last question. You do a lot of presentations with retail mums and dads, right? You've seen a lot of share market volatility. Is this time any different? And what message do you have for them?
On the great scheme of things, it's not. It's just another event. There's been some really sharp ones. 87, 3.5 years into my career, the share market fell 35% on one day, 50% over 2 months. And a lot of people were feeling really nervous after that. Turns out there was no impact on the economy and we sort of sailed on. Other occasions, they're all slightly different. The old saying, history rhymes, but it doesn't repeat. History doesn't repeat, but it rhymes.
Yeah.
So there's always different players. There's always different things going on. Sometimes they're quick. Sometimes they're really slow. You look at the falls in shares in 1973, 74, January 73 to October, I think it was 74. It's sort of gradual grind down. And then at the bottom, we're down 59%. About the time they canned the Brady Bunch, my favourite TV show at the time. That was a long, slow grind down. Whereas if you looked at what happened in the pandemic, we fell 35% odd, depending on the country, in 1 month.
Yep.
And this one, so far, has been relatively quick. So they're all slightly different, but they always have this pattern. You start off, typically the market's a little bit overvalued to some degree. Then something comes along, triggers a rethink, but a mean reversion kicks in, the market goes down, sentiment goes from being positive to negative, shares go from being overvalued to undervalued, and technically the share market goes from overbought to oversold. And then the conditions are eventually set up for a bottom, and then the bottom can come when the news is a little bit less negative, or it might be some positive things in there, and central banks pivot from was no hurry to cut rates to suddenly we're cutting rates. And then eventually you start to see base building. Can take a while, can fan out over a couple of months, and then market starts to pick up again. So that normal play out, I think, will happen here as well, even though the one big difference is that Trump US government has set the whole thing off in the first place. Normally it's the US government that jumps in to help.
Yes.
Things. So in that sense, it's a little bit reversed and perverse. But I think the way the market responds will be fairly similar to what we've said in the past.
I just don't like the media, unfortunately, coming out and using those headlines of
Billions,
$162 billion wiped off the ASX in 10 minutes, right?
Yeah.
That was, I think, the Monday.
Well, everyone's
Monday
obsessed
headline.
with that.
It's super obsessed. And then the thing is, don't look at your super accounts, right? And
Yeah.
I was on a flight on Sunday, and as I was getting off the plane, like waiting, and there was a flight attendant, 2 flight attendants next to me on a Qantas jet, and they're like, you see what the share market's done? Trump's crazy, da da da. And one of the ladies said, thank God, me and my husband were talking about it last night over dinner, and we're still 5 years away from retirement. And so the whole sequencing risk theory of, if I was retiring today, I'd be screwed.
Yeah, but not necessarily.
No, I don't. It's not necessary at all.
But the billions scare everybody. I mean, you basically take the market cap and then multiply that by the
percent drop
amount and you can do this in advance.
Yes.
Because you look at the futures. So on the weekend just passed, Australian futures were down 4.3% on Friday night. You take the market cap of 2.7 trillion, multiply the two out, and you got, voila, the 160 billion or whatever it was. And it turned out to be roughly that. I think at one stage it was down 6%, then it pulled back.
Yes.
And unfortunately, people relate more to the billions.
Yes.
And it's a bit unfortunate that the share market, there's several things here. Why do super funds have a bias towards shares in their portfolios? Because over time they provide higher returns than most other asset classes.
Correct.
Along with property and other growth assets, but much better returns than you'll get from cash or bonds. And so it makes sense to have shares in there. But the price we pay for that higher return is the higher volatility that comes with shares. It's a natural part of the share market. Now, the problem is that the share market goes up through the staircase slowly. On any given day, you might only be adding 5 billion or 1 billion or 2 billion, or a good day you might add 15 or something. But then when it comes down periodically, whether it's 74 or 87 or now, it comes down the elevator shaft. It goes down
it's a big shock.
Quick.
Yep.
So you can do the $1 billion calculation on the daily amount rather than just the percentage or the points fall. And then everyone gets scared from that. There's all this money wiped up on my super, and it's billions of dollars sort of thing. And of course, but you're not told, over the last year it went up by $280 billion or something like that. And that's a far slower, more boring thing. So that's just the nature of the market. I mean, the way I see it, for us as investors and for financial advisors, the key is to make the most of compound interest, which is where returns build on each other over time, and not get thrown off by cyclical volatility. Because if you get thrown off, you typically get thrown off when the market has a plunge and you see the headlines about the $1 billion, you get thrown off. I think I'm going to get back in once the market starts going up again. But by the time you get back in, it's often back at the top again.
Correct.
And so you've locked in a loss at the bottom, and then you've now got to buy it at a much more expensive price at the top. And most people can't get the timing right. That's really, really hard to get that perfectly right. So I think it's critically important as we go through these periods, and this is what I was thinking in the GFC. You work this out over a few years of being around. GFC and then the Eurozone crisis, and then Trump won, the 18%, right, almost 20% fall to Christmas Eve 2018, the pandemic, and then 2022 inflation. You got to turn down the noise. There's so much noise around this. You've got to find a way to turn it down. Rather than dial into the finance reports every night, watch something else.
Because you can't trade it. You simply can't trade it. I mean, to finish off with this point, last night the US they opened up, I think, a bit because someone leaked a rumor saying
it was up 4.5%.
Correct.
Open.
And then it sort of
all the way down.
Correct. Ended up negative, closing at the close.
There was one day when it was the day before that where it was down 4.5%. Then it was on the tariffs. Then it was up 3.5% on a rumor that
90
tariffs would be delayed. And then the rumor turned out to be false, and then it was back to flat. So trying to trade that is going to be really, really hard. It's just based on noise. So you got to try and turn that noise down, I think.
Yeah. On that note, Shane, thank you very much for your time.
Thanks, Jonathan. Thanks for having me.
This podcast is not financial product advice and is intended to provide information only. It does not take into account the investment objectives, financial situation, or needs of any person. You should assess whether the information is appropriate for you and consider talking to a financial advisor before making any investment decisions. Any investment examples are for illustrative purposes only. The information is taken from sources which are believed to be accurate, but Simon Wu, Jonathan Wu, SWU Financial Planning, and Personal Financial Services Limited accept no liability of any kind to any person who relies on the information contained in the podcast. Unless expressly stated, none of the information should be taken as a recommendation. For more information, please visit www.simonwu.com.au.